Hi everyone, welcome to our exclusive webinar, R&R and D AI World. Absolutely delighted to have you guys join us today. I know it's a working day and it's 5 p.m. Today we have a special guest, Dan from Phillip Capital. He'll be going through with us the webinar is regarding how AI is going to impact the investment landscape. Okay. Still have people coming in. Okay, handing it over to you, Dan.
Okay, thanks, Alvin. Thank you. Okay, good afternoon, I would say, because it's 5 p.m., it's still afternoon. Okay, good afternoon, everyone. First of all, I would like to thank all of you for taking your precious time off to attend this webinar. I really hope that it will be helpful to you. I understand that this webinar is organized by share investors. Okay, so I will assume that most of you are either active investors or experienced investors who have been monitoring the market for quite a while. Okay, so for this webinar, right, there are some basic context which I might skip lah. Okay, so if there's any clarification, please feel free to ask me during the Q&A session, and hopefully I will be able to clear some of your doubt. Okay, so without further ado, let me just share screen first. Okay, so today I'm going to share about this thing called R&R in an AI world. Okay, first of all, just to give you all some background of myself, since this is the first time that I'm in a webinar organized by share investors. Okay, so basically, presently I'm a remiser, okay, a trading rep with Phillip Securities, as well as a SGX Academy speaker. Okay, so I joined Phillip Security back in 2001. Okay, that was a long time ago. So this marks my 23rd year in the industry. Okay, so beside sharing market insights in webinar and seminar, right, I also do traditional stockbroking, security advisory, and onboarding of managed accounts. So you can see, right, I have been working with retail investors for the most part, or I would say the whole of my working life. Okay, and I really hope that this webinar will be very relatable to you as investors, because when I do up all the slides, when I do this webinar, right, I'm actually doing it through the lens of a retail investors. Okay, and I don't waste too much time on myself. So if you need to PM me, you can take out your handphone now and scan the QR code on the bottom right hand corner. That will add my handphone number to your contact list. Okay, if not, feel free to go into any of my socials. Okay, so my homepage is here. I am searchable on LinkedIn. Okay, and beside having a private WhatsApp channel for my own client, right, I also have a free Telegram channel, which you all are free to join. Okay, so you just go to Telegram, you search under Dan Daily Stocks. Okay, feel free to join. It's free. There's no charge, no fee or whatsoever. Okay, okay. Disclaimer. So this webinar is solely for educational purposes. It's not meant to do any stock recommendation or whatsoever. Okay. Okay, guys, I will need your attention for 1 minute to watch this very, very, very fast video. And maybe I can share with you some of my thoughts.
Data centers are the unsung heroes. They are the powerhouses behind the scenes, driving the world of artificial intelligence. Imagine the amount of data being processed every second, every minute. This is where data centers come into play, storing, managing, and disseminating vast amounts of data. But it's not just about storage. Data centers are the linchpin in the AI revolution, providing the computing power to train sophisticated models, from image recognition to natural language processing. Investing in data centers is investing in the future. It's backing the infrastructure that's propelling AI forward, a sector predicted to reach a market value of $100 billion by the end of the decade. Remember, behind every great AI, there's a great data center. It's time to recognize the power of data centers in artificial intelligence. Unlock the potential, invest wisely, and propel the future.
Okay, guys. Okay, guess, guys, how long do I take to create this video? Maybe you all can put in the chat to see to tell me how long do you think I take to create this video? Anyone? Anyone want to put on the chat? 1 day, 8 hours, 2 hours, 15 minutes, 3 minutes. Okay, thank you for all your replies. Okay, actually, this video is created in less than 10 minutes. Okay, so I only use 3 minutes of my time to input some information, and the AI actually create the whole video. Okay, so this is just to illustrate how powerful AI is now. Okay, so in this era that is dominated by AI, right, the investment landscape is evolving at a very unprecedented pace. Okay, algorithm, data analytics, and automation are no longer futuristic concept. They are actually here and now already. Okay, so AI is a theme that we should be looking forward to for this year or maybe even beyond. Okay.
In the world of ever-evolving
Okay,
technology,
sorry,
data
this-
centers are the
Okay, so today my topic is I'm sorry, what happened to the full screen? Okay, so today my topic is R&R in an AI world. Okay, so what does R&R mean? Okay, definitely it doesn't refers to rest and relax. Okay, so today I'm going to talk about is rate and REITs in an AI world. So today the whole webinar is going to be a very thematic top-down approach. Okay, so we seek to identify the theme, which in this case is AI, okay, and look at the sector that will poise to benefit from this theme, and ultimately the individual company that could also benefit from the whole AI theme. Okay, so today's topic will be rate and risk in the AI world. Okay, so these are some of the information, some of the rates information that I have compiled since the pandemic. Okay, so in this high interest rate environment, it's very hard to imagine that just 2 years ago, okay, or slightly less than 2 years ago, we are actually enjoying a federal fund rate of 0%. Okay, so you heard it right, it's 0%. Okay, so for context, right, during the 2020, when the pandemic struck, right, in order to address economic downturn, a recession, the Federal Reserve actually cut a massive 150 basis point to reduce the federal fund rate to 0%. Okay, of which one of them is an off-cycle rate cut. Okay, and the rate has stayed at 0% since 2020 to 2022 March. Okay, that is almost like the whole part of the pandemic. Okay, or rather most of it lah. Okay, so when the Federal Reserve start to hike rate by 25 basis point in March 2022, right? Initially, the impact on the stock market is not that big. Okay, because in the decade before the pandemic, we have seen a rate hike, we have seen rate cut. Okay, but usually it's up 25 basis point, down 25 basis point. So when they first hike this rate at 25 basis point, the impact on the market, yes, there is, okay, but it's not so big. Okay, but subsequently, right, as you can see, the magnitude has increased to 50, and the heaviest blow actually comes in June 2022 when they hiked a 75 basis point. Okay, why is this so massive? because this one is actually the first 75 basis point rate hike in almost 30 years, because the one before this is actually in 1993 or 1994. And what makes it worse, right, is that after this, right, the Federal Reserve actually add on another 375 basis point. Okay, that brings the federal fund rate to 3.75 to 4% in a very short time frame of about 9 months. Okay, and since then, right, although the rate hike has the magnitude of the rate hike has been decreased by 35 basis points to 50 to 35 to 35 to 35. Okay, but we must understand that because the federal fund rate is already at 4%, the interest is already very high. So every rate hike, even though the magnitude is smaller, is like a rock putting behind the back of the company in terms of borrowing costs. Okay, so it wasn't until July 2023 when we actually see the peak of the rate hike cycle, which is 5.25 to 5.5%. Okay, I mean, in hindsight, it's easy for me to say now, oh yes, July 2023 is the high. But at that point in time, right, people were still very concerned, still very wary whether that is the end of the rate hike cycle or not. Okay, it wasn't until November 23 or December 23 when the Federal Reserve actually signaled a change in their stand, when the market actually said, okay, now we are firmly behind the rate hike cycle. Okay, we might be probably looking at a start of a rate cut cycle in 2024, which is this year. Okay, so extract from this December FOMC meeting. Okay, so as you can see, they have kept the rate unchanged at 5.25 to 5.5%. And I think the strongest statement that was put out in this FOMC meeting was this statement. Okay, so they have came up with a projection that there might be 3 rate cuts in 2024. So you see, right now it's 5.25 to 5.5. They have the median participant project that the level of the federal fund rate will be 4.6% at the end of 2024. So if you calculate backwards, okay, so 5.25 to 5.5, if you have, assuming 3 rate cuts of 25 basis point, the next one will be 5 to 5.25, 4.75 to 5, 4.5 to 4.75. Okay, so 4.5 to 4.75 will be within this range, 4.6%. Okay, so that's how the 3 rate cuts projection comes about. Okay, but unfortunately, right, in this December FOMC meeting, while they signal that there we may be seeing a start of a rate cut cycle, they did not give any timeline, okay, to when the first rate cut will come. Okay, so initially the market actually went up because of the expectation of a rate cut. But fast forward to the January-February FOMC meeting, which is just last week, okay, you can see what they have said. So they will still remain the rate at 5.25 to 5.5, okay, but this time around they are trying to cool down the rate cut, the speed of the rate cut projection, and stick to a longer for higher rates. Okay, so they say that the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving substantially towards 2%. Okay, they have also said that they have to assess the incoming data and evolving outlook, okay, and balance the risk and reward. So what they are trying to say here is that a lot of things, when the first rate cut will comes, depend on the US economic data that's coming out. Okay, the core PCE index, the CPI index, okay, maybe even the PMI index. Okay, so this is what they are trying to say. Okay, so that is on the rates. Okay, and for the REITs, right, since the first REIT was being listed in 2001, that was Capital Mall Trust, which is now Capital Land Integrated Commercial Trust. Okay, since 2001 to 2024, right, the life cycle of REITs can actually be categorized into 2 sections. Okay, one is before the COVID-19, okay, which is before 2020. The other is after 2020. Okay, so what happened is that pre-COVID, okay, for the decade before the pre-COVID or even longer, REITs has often been seen as a relatively stable investment. Okay, why? because number one, cost of borrowing is lower. Okay. Number two, the occupancy rate is high. Number three, the tenant financial standing is stable. Okay, which means that we don't see a lot of shop, a lot of tenant close shop. We don't see a lot of tenant default, kind of thing. And the tenant turnover is also not so high. Okay, so in the past, right, because of all these favorable condition, okay, a lot of investors has been buying REITs, just buy there and collect the dividend, which is like 2 times a year or 4 times a year, depending on which REITs you buy. So you compare that to buying, say, a property in Singapore. Okay, for example, if you are property investors, you buy a property, okay, you rent out, you collect rent. Okay, the property price may go up or come down. Okay, but when they come down, you will just keep on collecting rent until the price goes up. And the price, and you may even consider to sell when the property price hit a certain level or your target level. Okay, so the same goes for REITs investors. So what they do is that instead of buying the property, they buy into REITs. Okay, they collect the dividend. Okay, of course the REIT price can go up and come down, but the good thing is that when you buy a property, okay, you need to pay the agent fee, you need to pay the stamp duty, you need to pay the property tax. Okay, and for REITs, right, they don't have any of this. So pre-COVID, right, REITs is actually a very good instrument for what I call recurring income portfolio. Okay, in economic term, they call it the dividend portfolio, but for me, I prefer to call it a recurring income portfolio. Okay, but that was in the past. Okay, that was pre-2020. Okay, REITs suffered this first blow in 2020 when the COVID-19 pandemic struck. Why? Because first of all, we have border restriction. Okay, we have no tourists. Footfall in retail malls has dropped. Hotel is vacant. Okay, so the hospitality REITs, the retail REITs all suffer. Okay, of course, we also have the circuit breaker where residents are strongly advised to stay at home. So a lot of shop has no business, they close down. Restaurant can only take in delivery or takeaways. Okay, and in this aspect, retail malls also suffer. Okay, and a lot of companies trigger their BCP, okay, their business continuity plan. Okay, and work from home has been the norm during the COVID-19. Okay, and that impact the office REIT. Okay, so during the COVID-19 era, right, REITs was dealt the first blow. But the thing is that that blow is not that heavy because they actually recovered within 3 months. Okay, they recovered within 3 months to about 70 to 80% from the low. Okay, so that was not the heaviest blow, I would say. Okay, the heaviest blow came in March 2022 when the Federal Reserve start the rate hike cycle. Okay, 35 basis point. Why? Okay, for context, right? So when interest rate goes up, they actually increase the cost of borrowing for REITs. And why is that important? Because REITs, there are two very unique feature. Okay, number one, okay, they have to pay out 90% of their net profit to unit holder. That is by regulation. So in a sense, right, they are poor. Okay, poor in the sense like for example, if you have an income of $10,000, you give $9,000 to your parents, you are left with $1,000. Okay, that kind of poor. Okay, so REITs are generally poor. So bank borrowings is a very big part of their business, of their working capital. And when interest rates goes up, right, it will impact the cost of borrowing. Okay, of course, there is also a regulation that the gearing cannot be more than 50%. But before COVID, right, the gearing is usually 30 plus, maybe a bit to 40. Okay, and when the interest rate goes up, till today, we have actually seen one REIT, okay, cross the 50% gearing ratio. Okay, and a lot of REITs has also seen their gearing ratio went up to 40% plus during the 2022 to 2023. Okay, so it was so bad that the price of the REIT almost go back to their COVID low. Okay, so as I mentioned earlier, right, during the COVID low, the REIT price actually plunged. Okay, they plunged very sharply, but they recovered within 3 months to 70% to 80%. Okay, but this time around, it was like a slow dying death. Okay, so they actually went back to COVID-19 in the space of, I think about 1.5 years. Okay, so all in all, right, now REITs are actually at a low base. And in view of the high interest rate environment, okay, the expectation of a rate cut cycle in 2024, okay, will prove to be very good for REITs. Okay, so at this juncture, based on all this evidence, REITs present a very attractive proposition going forward. Okay, so this is a chart of the IHS REIT Leaders Index. Okay, I use this index because I prefer, when I say REITs, right, I usually prefer or refers to these established REIT. Okay, so IHS REIT Leaders Index usually is the index that I use to measure the REIT price. Okay, so you can see, right, this is the COVID period. Okay, as you can see, when the COVID strike, there was a very sharp downturn. Okay, but they actually recovered very fast within 3 months. Okay, this is somewhere in March, then this is somewhere in June. Okay, so you can see that it's about 70 to 80%. Since then, right, if you notice, REITs has been trading range bound for a good part of during the years of the pandemic. Okay, it wasn't until the first rate hike came about when the REIT start to drop again. Okay, initially they dropped only a bit because it's 25 basis point. As I mentioned earlier, right, in the past, whenever there's rate cut or rate hike, it is always 25 basis point up or 25 basis point down. So initially the impact is not that big. Okay, but the heaviest blow came when the rate hike increased to 75 basis point. And since then, right, we have seen another 375 basis point. That makes it 475 basis point. And we have seen the risk all the way drop, okay, to almost their COVID low. Okay, so after the Federal Reserve changed their stand on the interest rate environment, which I have mentioned earlier, we start to see REITs coming up. Okay, okay. They come up because, as I mentioned earlier, that is because the Federal Reserve has changed their stand, okay, from a rate hike cycle to a rate cut cycle. However, as I mentioned earlier, there is no timeline given. Okay, so as at the turn of the year, right, we start to see some profit taking in REITs in view that, you know, we don't know when the first rate cut come. Initially, they thought it will come in March, but just now I have shown you in the January, February FOMC statement, right? It seems like it might be in May or June or even later because it said it depends on the economic data that is going to come out. Okay, and why would I say profit taking? So this is a 5-year chart. So if you look back at this 1 year, right? Okay, you can see that actually REITs has already recovered quite a fair bit already. Okay, has already recovered quite a fair bit. So it's a very fair point to think that there is some pullback. Okay, and perhaps when the rate cut really materialize, we will see REITs going back up again. Okay, not to mention that we are aiming for the, you know, the pre-COVID kind of peak lah. Let's just assume that REITs go back to normality during the COVID period, which is around this range. Okay, so as you can see, right, there's still a good 30 to 40% upside. Okay, if everything goes as expectation. Okay. Okay, so I have been talking about rates and REITs. Okay, because we have these we are looking to this rate cut cycle starting this year. That's why it will be good for REITs. However, there are two very important clarification that I need to make on my statement. Okay, first of all is projection versus reality. Okay, if you just go to Google, okay, you just type anything about rate and REITs, okay, they will tell you that rate cut is very highly likely in 2024. We don't know when. It could be May or June or even later. Okay, but rate cut is is like it's like 90% to 95% pricing already. Okay, but one thing we need to take note is that there is this thing between projections and reality. Okay, the Fed has already said, okay, going forward, it depends on the economy data that's going to come out. Okay, so while we do a projection that there is a rate cut cycle, okay, there is a rate cut cycle in 2024, we must also be wary and be nimble to realize that, okay, when there's a change in the environment, like for example, the next CPI or the next core PCE index suddenly show a stronger than expected economy, right? Okay, this rate cut narrative may change. Okay, maybe from 3 rate cuts to 2 rate cuts. Okay, so what actually transpire in the end may or may not be our projection. Okay, so we are only human beings, right? We don't have a crystal ball. We cannot predict the future, but that is what we can do based on the information that we have today. Okay, so we stick to our own projection, but at the same time, we look out for any change in the fundamentals, any change in the news event. Okay, the second clarification that I want to make is that REITs is affected by more than one factor. Okay, yes, rate and REITs have a inverse relationship, okay, because of the cost of borrowing. Okay, but that doesn't mean that, because rate cuts, because of rate coming down, REITs must go up. Okay, it doesn't work this way. Okay, the risk is not affected by only one factor. It can be affected by sectorial factors. It can even be affected by their own company specific factor. Okay, like for example, I can give you an example. Like for example, for some reason, okay, no tourists is coming to Singapore. Okay, even though there's a rate cut, the hospitality rate may suffer. They may not go up because, no tourists coming in. There's no take up in hotel occupancy, things like that. This is just a hypothetical example. Or maybe as we have seen already, some of the REITs are already having tenant default. Okay, so even rates is coming down because of tenant default is actually affecting that particular REITs itself. Okay, so when I say REITs present an attractive proposition going forward, I'm talking it as a very general sense. Okay, it's from a top-down approach. It doesn't mean that, all the REITs will surely go up just because rate cuts coming down. Okay. Okay, so rates and REITs in the AI world. I have covered REITs and rates. Okay, so now I'm coming to artificial intelligence. Okay, I will not be going to the basic context of what is an AI. I'm sure most of you already know what is an AI. It is one of the most popular buzzword in 2023 and even today. Okay, you just Google artificial intelligence, everything come out. Okay, so I'm not going into the basic context of it. Okay, but what I want to put across to you is that AI, when we talk about AI team in terms of investment, it is not only referring to, the NVIDIA, the AMD, the Intel, the US market. Okay, it's actually impacting the whole world, and there's a lot of other sectors that are benefiting from AI. Okay, not just chip makers. Okay, of course, chip maker is the major beneficiary because they are the one who actually they are actually the one to manufacture the chip that process the data. Okay. So as I said, okay, AI is not confined to US market only. Okay, not only to the chip makers there or any other cyber security stocks in the US market. Actually, AI is very much in the rest of the world and in this part of the world. Okay, so these are just some news articles that I've taken out from the internet. Okay, so as you can see, in a visit, I think just last month, okay, the NVIDIA CEO, Jensen Huang, has said that they are looking to build a new and large supercomputer here. Okay, so he has already pinpointed Singapore as a potential place to so-called launch their AI journey. Okay, and AI has also been gaining a lot of acceptance in asset management and wealth advisory. Oh, this one I can vouch for it because I'm in the industry. Okay, wealth advisory, asset management, there's a lot of AI at works. Okay, and it's not only the private sector, even the government, okay, is trying to push for AI adoption as well. Okay, so you see, as I said, tripling the Singapore government is looking to triple their AI force to about 15,000. Okay, but of course, it's not just about numbers. We also need talents and ideas. Okay, and as we all know, Singapore is a very structured country. Okay, we are a very rule-based country. So when we want to when we want to go into AI, right, we also have to come up with a governance framework to make sure that it's not being abused, to make sure that it's cyber security. So Singapore has also been seeking view on governance framework for generic AI. Okay, so you can see that AI is very much in this part of the world as well. Okay, it's not only in US market, okay, or Europe market, or Hong Kong market, or even the TSMC in Taiwan. Okay, it's almost on a global basis. Okay, so in terms of investment, right, in the AI universe, basically we can categorize them into two sectors. Okay, the upstream and the downstream. Okay, for the upstream, as I mentioned earlier, is the chip makers. Okay, your NVIDIA, your AMD, your Intel, who actually manufacture the chip that process the data. Okay, but other than chip makers, right? Okay, there is also downstream. Okay, the company who specialize in AI bots, who specialize in cloud computing. Okay, so AI bot is the machine that process the data to end user. Okay, I mean that is the ultimate aim, right? That's the ultimate aim of AI, so that the end user can benefit, right? Okay, so chip maker is the upstream, AI bot, cloud computing is the downstream. And in order for the AI bot to process that data to this end user, right, the data has to come from somewhere. They have to be stored. Okay, they have to be stored. Okay, so where are they stored? They are actually stored in data centers. Okay, so as the video that you have seen right at the start, okay, they have said behind every great AI, there is a great data center. Okay, I have to confess, I didn't think this statement is not created by me. It's actually created by the AI itself. Okay, it was created in the video by the AI. Okay, so behind every great AI, there is a great data center. Okay, so coming back to the Singapore market, right? We have to be a bit pragmatic here. Okay, so SGX, the Singapore market, is not as big as the US market. Okay, at least not now lah. But you must always hold the belief that one day we'll reach there. Okay, but that will be the future lah. Okay, so on SGX, we do not have chip makers that list on our local shop. Okay, chip makers of the caliber of NVIDIA or Intel or AMD or ASML. We don't have. Okay, we also don't have the company like Microsoft or Google that specialize in AI bot. Okay, but what we do have is that we have listed company, okay, that are suppliers to the chip makers. Okay, the UMS, the Franken, the AEM. We also got other semiconductors stocks like Aztec Global and Valutronics. Okay, but today my topic is rate and REITs in the AI world. So I will not be talking about the supplier to chip makers. That itself will be a very big topic. Perhaps share investor can invite me again and we can do another webinar on the suppliers. Okay, so today I'm going to talk about data center REITs. Okay, while Singapore market is relatively smaller than the US market, we are actually very big in terms of REITs. Okay, and if I'm not wrong, okay, we are the biggest market for REITs in Asia ex Japan. Okay, so we have REITs. REITs have a very big presence in Singapore. Okay, and today we are going to explore some data center REITs. Okay, so you see, back in September last year, that is about 4 months ago. Yeah, 4 months ago, when NVIDIA is surging like 50% or 100%. Okay, investors in this part of the world is actually already looking at data center to ride on the AI wave. Okay, so as you can see, right, investment in AI is booming worldwide. the frenzy fueled by the release of ChatGPT has led to a surge in demand for data center, as well as the REITs that invest in them. Okay, according to JLL research, the rise of AI will boost the demand for data center worldwide, and the rise leading to increased data usage and improved computing efficiency. Okay, so as more people adopt AI, as more people use ChatGPT, as more people use AI bot, okay, more data will be processed. Okay, and when there are more data to be processed, you need to have more data centers because the data need to be stored somewhere. Okay, so that is where the data center come into the picture. Okay, so just now I have identified the AI team. Okay, now I'm moving to the sector that is data center. Okay, this is very recent, just about a few weeks ago. It's actually from the Business Time. Okay, so they said the top performing S-REIT for the year was DigiCorp REITs. Okay, this is a bit, I would say a bit unexpected or a bit lucky. Okay, why? Because actually, for most part of the year, right, they are actually in red. Okay, why? Because in early 2023, they actually have a tenant default. Okay, there's a tenant that go bankrupt. Okay, so as you can see, the counter has been in red for most of the year, but rally sharply from November after they have there's an agreement, okay, to solve the problem. Okay, to solve the problem of the bankruptcy of his second largest customer. Okay, previously reported as Cetera Technologies. Okay, later I can give you some context on this. Okay, in the Share Investor WebPro. Okay, so the second top performing pure data center REITs, right, is actually Kappa DC REITs. Okay, but this one I have to let you all know, okay, is also a bit they also have a bit of problem. Okay, what is that? Because although they are the second performing S-REIT, right, it was only up to mid-December. Because in mid-December, they themselves meet with another tenant default. Okay, that was in Guangdong data center. They are Guangdong in China. Okay, and so you see, right, just now I said, pre-COVID, there's very little news about this tenant problem, tenant financials, worries kind of thing. But after COVID, right, everything changes. Okay, but anyway, coming back to this, right, Kappa DC REIT has been performing very well, okay, until the tenant default, okay, which is why just now I want to make that clarification that it doesn't mean that, oh, just because rate come down, REITs have to go up. Just because Kappa DC REIT is a pure data center REITs, they have to go up because of the AI team. No, okay, it doesn't work this way. Ultimately, right, the investment merit of each company, each REITs, lies in the company fundamentals and the specific news itself. Okay, so what I'm doing here is just to give a thematic approach from a top-down approach. Okay, so other industrial REIT that have data center exposure are Mapletree Industrial Trust and CapitaLand Ascender REITs. Okay, and they are also among the top 5 S-REIT performers lah. Okay, so well, I'm just a trading rep here. Okay, don't just take it from me, take it from some of the experts down here. As you can see, they say that data center and senior living are two sectors they are most positive on in the US. Okay, that will bring to DigiCorp. Okay, because DigiCorp is actually a US pure data center play. Okay, and as you can see, the kind of generic AI wave that hit this year, 2023, has just been explosive for data center demand. Okay, so there is a very big demand for data center, as I explained earlier. While there are initially some skepticism on how much demand could come from AI, in terms of data center listing, it already coming in incredibly strong. Okay, so the industry insider is already seeing a very strong demand in terms of data center listing. Okay, leasing, sorry. Okay, so it's not just expectation, it's actually from the industry insiders. Okay, and as you can see here, looking ahead, we expect data center REITs to continue to benefit from the strong circular growth trends driving the data center sector. That said, investors should remain watchful on tenant-specific issue that may negatively impact distribution going forward. Okay, so this sum up what I have wanted to say lah. Okay, so the outlook for REITs is good. Okay, the outlook for AI is very good. The demand for data center is expected to be strong. Okay, but ultimately, right, we still have to be watchful on the REIT specific. Okay, the tenant whether it's tenant specific or anything that relate to that one specific REITs. Okay. This is taken just 2 days ago. Actually, I just added in yesterday. Okay, so it's 5th of December, 5th of February. Okay, so you can see this is taken from SGX website. They have listed out 5 S-REIT. Okay, the one that I have not talked about is this CapitaLand India Trust, which I don't think I'll be talking about it today because this one is actually a property trust. Okay, so there's a difference between REITs and trust. Okay, so CapitaLand India Trust is actually a trust. It is a property trust. It's not a REITs. Okay, but anyway, we can see what was written here. According to JLL in their data center 2024 global outlook, right? They said that the exponential progress of AI and machine learning is expected to create unprecedented demand for global data centers. Okay, and data center storage is expected to grow from 10.1 zettabyte. Okay, it's not even terabyte, it's zettabyte. Okay, in 2023 to 21 zettabyte in 2027. Okay, or a 5-year compounded annual growth rate of 18.5%. Okay, and despite challenge around economic slowdown, high property expenses, or even some tenant default, data center focused S-REIT were the best performing sub-industry in 2023. Okay, and portfolio occupancy level has also remained very resilient, above the 95% on average. Okay, why is the portfolio occupancy level high and resilient? Mainly it's because data center is not easy to move. Okay, it's not like, oh, you can take out the whole thing, you know, and move to another place. It's not like, I mean, if you open a flower shop or you open an eatery or F&B, you can close shop here and open the F&B at another shopping mall. But for data center, right, a lot of things, a lot of behind the scene that need to be done in order to move that data center to another place. Okay, that includes security, that includes labor, you know, a lot of issue. Okay, so that is why I suspect the portfolio, the occupancy level is always very resilient for data center. Okay, so today I'm going to talk about these 4 REITs that have data center in their portfolio. Okay, all of them are very unique and special in their own way. Okay, so if one is looking at pure data center play, right, there's actually 2. Okay, so they have Kappa DC REIT and Digicore US REIT. Okay, but even though both of them are pure data center, they are very different. Okay, for Kappa DC REIT, right, they have property in Singapore, Malaysia, China, Australia, and Europe. Okay, as for Digicore, their main data center is actually in North America, with one in Frankfurt, Germany. Okay, they have no presence outside of these 2 places until this year. Okay, because there were news that they are going to acquire some property in Japan. Okay, they are looking to do some Japan acquisition, which can be found in Share Investor WebPro later. Okay, I think I can show you later if there's time. Okay, and if you are looking at just REITs that have data center in their portfolio, it will be Mapletree Industrial Trust and Capland Ascender REITs. So for Mapletree Industrial Trust and Ascenders REIT, right, they are a much bigger outfit than these 2. Okay, so actually Kappa DC REIT and Digicore US REIT, they are actually quite small by size lah. Okay, Digicore only got 11, I think only have 11 properties. I think they already because of the tenant, the resolution, right, the agreement, right, I think they're going to sell off 2 facilities in US, in Silicon Valley, and they are going to acquire some data center or some property in Japan. Okay, so that might change going forward. But essentially at this point in time, or just at the end of based on as of December 23, they have about 11 properties. So they are quite small. Okay, Ascenders REIT is probably the biggest. Okay, followed by MIT. Okay, so MIT, right? The good thing about MIT is that the data center presence is actually 56% of the whole portfolio. Okay, and if I remember correctly, according to management, they are looking to grow to 75% in the next 1 or 2 years. Okay, as for Ascender REITs, well, they are not so much, not so much a big data center play because they only have about 9%. Okay, 9% of the portfolio in data centers. Okay, but hey, I mean, they at least they have a toe inside the AI team, right? Inside the data center arena. Okay, so these are the 4 REITs that is having data center in their portfolio, and each of them are very unique. Okay, if you ask me, okay, as I said, this is not stock recommendation, but if you ask me personally, which one is my preference, I would say go for one that have a strong sponsor, preferably government link, preferably very big in terms of market cap, and preferably have a high proportion of data center in their portfolio. Okay, so I'll leave it to you to guess which one of them it is. Okay. Okay, so as I mentioned earlier, right, we can talk about thematic approach. We can talk about how great the AI is, how REITs is going to benefit from the rate cut environment. Okay, but ultimately, right, when we want to buy a stocks, okay, the investment merits ultimately lie in the company fundamentals and specific. Okay, so in this case, maybe I can just jump over to this share investor WebPro to find out some of the things. I don't think I have enough time to cover all the 4 counters. So maybe I'll just cover 1 or 2. Maybe I just start with Mapletree Industrial Trust. Okay, but before that, right? So I believe a lot of you are already a WebPro user, or if you are not, maybe this is a very good preview for you all to see what's inside. Okay, so if you all are interested in getting a share investor membership, you all can PM me. Maybe I can just facilitate the application, the membership procedure. Okay, so in this share investor WebPro, right, there are a lot of information here. Basically, you have every information here. You don't really need to go anywhere else. Okay, they are one of the biggest financial portal in Singapore and Malaysia already. So everything is here. Okay, so just a very quick preview. Okay, I don't want to waste too much time on the other things. They have price. Okay, so you can look at price, the stock price, the time and sales, the trade summary, which is also available in a lot of other platforms. Okay, you can create your own portfolio. Okay, and this is where it is powerful. Okay, so if you are a fundamental analysis hardcore, right? If you are FA analyst, right? This is a very good website for you. Okay, so they have a fact sheet, they have all the financials, everything put nicely there. Okay, they even have this comparison, according to quarter, according to different stocks, according to year, and things like that. Okay, and they also have insider tradings. Okay, some of the information, the ownership, okay, and company buybacks and event calendar. For me personally, right, because I'm a broker, okay, I cover a lot of stocks because I have a lot of clients, a lot of investors who ask me different stocks. So for me, speed is very important. Okay, for me personally, for this page, I use mainly insider trading and event calendar to help me get the information that I want. Okay, of course, they also have screener. Okay, where you have you can screen according to FA. If you are into FA, you can screen according to their P ratio, their debt ratio, their their price to book or whatever. Okay, if you are a technician, you can also screen according to moving average, like a golden cross, 50 cross 200. You can do a RSI below something, below 30, or stochastic or anything. Okay, so you can do a screener here as well. Okay, basically for me, right, there are 2 tabs that I use the most. One of these is charts. Okay, so I use this chart, this share investor chart, quite extensively. Okay, I'll come to that later. I'll come to this later. Okay, and okay, by the way, committee, when you click on this, they will go to investing node, okay, which is a subsidiary of share investors. I post there every day. So if you like to see what I post, you can join the investing node for free, and join the Active Trader Club. Okay, it's a free membership. The investing node admin will approve you. Okay, it's free of charge. There's no charge. Okay, and just now I was saying there are two tabs that I use the most. One is the chart. The other one is this news. Okay, this is one of the most convenient and popular site that the tab that I use very often. Okay, so you can see, you can just screen according to the stock that you want. In this case, I have already put Mapletree Industrial Trust. Okay, so they will collate the news from in-house like Share Investor Express and Investor One. Okay, both of these are in-house. They also have news from SGX, the exchange news. Okay, and they also have Trading Central. Okay, you can see here Trading Central. Trading Central is very good if you are a technician. Okay, so I can just open any tab for you to see. So they will tell you according to their TA. Okay, they will tell you what are the short-term view, what are the mid-term view, then they show you the chart. Okay, so if you are a TA practitioner, you can go under this Trading Central to take a look. Okay, of course, they also have public news media like Business Time and Straits Time. Okay, but maybe you ask me, hey, Business Time and Straits Time, I can also read from internet. Why would I want to come here and read? Okay, well, there is a difference. There is a difference. Let me just show to you. Let me click on one of the Business Time news. Let's say this one. Okay, this one is the one that I showed you just now. Remember, just now I showed you in one of the slides, better year since for S-REIT by Business Time. Okay, so you can see, you can read the whole article here. But if you go to Business Time, right, you notice that they are only for subscribers. Okay, so you can't actually read the whole article. Okay, you can only read maybe just a few liners. Okay, but in these share investors, they actually have acquired the permission to reproduce here. Okay, in its entirety. Okay, so you don't have to go elsewhere. You can just come here and you have all the news in its entirety for you. Okay. Okay, now enough of WebPro. Now coming back to this Mapletree Industrial Trust. Okay, so coincidentally, right, this morning, actually, MIT also have news. Okay, and I also found out here. Okay, so you can see, right at the beginning, right, this morning, right, at 7:30 a.m., together with SGX next, which means that they actually port the news from the SGX to here. So they will tell you, oh, okay, MIT has already divested Darling Hawk cluster for 50.6 million. Okay, so if you are a short-term trader, okay, these are news that you probably could have capitalized on, okay, because they are given to you before the market open. Okay, so these are the things that it works. Okay, so since we are going to do some deep dive into this MIT, maybe we can look at one of their latest result here. Okay, so this is by Share Investor Express. Okay, so they will just bring me to this MIT press release for their latest result. So as you can see, right, this is year on year. Year on year is here. Okay, 3Q and 3Q. So year on year, right, the metrics are all quite good. In fact, okay, you can see that the gross revenue is up, the MPI is up, the distribution to unit holder, which is of concern to a lot of people, is also up. Okay, but DPU is down. Okay, DPU is distribution per unit. Maybe you ask me, why is the distribution up but the DPU down? Okay, mainly because there is an enlarged base. Okay, so what happened is that for the last distribution, right, they actually have this DRP, distribution reinvestment plan. So there are investors who opt for units instead of cash. Okay, so when they opt for unit, right, new unit will be issued, okay, to them. Okay, and because of that, the number of shares in the market increase, and that is why there is a drop in DPU. But for the investors who subscribe for that DRP, right, he will not see a loss, or rather he will not see a dip in his distribution because his unit has become more, okay, on an individual basis. Okay, so if you can take a look, right? Actually, MIT result is not that bad. Okay, and in terms of capital management, it was not written here. Maybe we can take a look maybe here. So you can see that their aggregate leverage ratio is still quite good, okay, quite decent. It's quite low, 38.6%. They haven't even hit 40% yet. Gearing ratio for REITs, there is a cap at 50%. Okay, so at 38.6%, that's actually still quite a good headroom lah, quite a good debt headroom going up. Okay, and after looking at result, we can take a look at the chart. Okay, as you can see, right, since 2020, okay, since the pandemic, together with the rate hike cycle, we have seen MIT has been falling for most part of the 3 years. Okay, it wasn't until when the Federal Reserve have a change in stand in November, December 23, where we actually see MIT break out of this downtrend channel. Okay, so if you zoom in, right, once they break out of here, okay, they go up like all other REITs. Okay, in fact, most of the REIT has been trending up during this period of time. And what we observe here is we have seen a golden cross. Okay, bear with me, for those TA practitioner, you know jolly well what the golden cross is. But for the benefit of those who are not aware, golden cross is a very bullish signal for a slightly longer term when the 50 MA cut the 200 MA upwards. Okay, and it's bearish if the 50 MA cut the 200 MA downwards. Okay, this golden cross and death cross, right, when it's vice versa, right, are very strong signals for a slightly longer term. Okay, short term, actually this one doesn't really work that well lah. Okay, and you can see that the golden cross usually come after the price has already went up quite a fair bit. Why? Because moving average itself is a lagging indicator, okay, which is why it's more accurate, but it's lagging. Okay, that is why it's good for longer term. Okay, for short term, you may need to use a shorter duration, like maybe for me, intraday, I probably will be using 5-8-13. Okay, 5 EMA, 8 EMA, 13 EMA. There are people who are very active, mid-term, they will do 20-50. Okay, so it really depends on your investment horizon. Okay, but because this one is a thematic approach, so we are actually looking longer term, like the next 1 or even 2 or even 3 years. Okay, so you can see that there's a golden cross that is appearing, which means that the stock price is supposed to be on an uptrend. Okay, and very recently, right, as I mentioned earlier, there is a dip. Okay, along with the other REIT, there's a dip. Okay, the good thing is that MIT has been holding above this resistance turn support. So you can see that they try to break one time here, they didn't break. The second time here, they didn't break. The third time when they break, they drop back. If you zoom in, right, you see this very long red bar. Okay, they drop, they break the support, but the next day they actually close above that support again. Okay, so this is not a convincing break. Okay, and the next time they break again, okay, the next day you can see that they go up again. Okay, and this time round, it's still the same. They touch here, they hang on here. Okay, so as long as this support holds, right, okay, on a technical sense, I would say that MIT is still okay. Okay, as long as this support holds. Okay, and we might be probably looking at maybe the recent high as the next resistance, which is about 2.53, somewhere around there. Well, if it's break, then maybe we'll be looking at about 2.36 or 2.35. Okay, so that is just a rough guide lah. Okay, do I have enough time to cover another? Okay, maybe I'll cover another stocks. Okay, maybe let's do Capital DC REIT. Okay, I don't want to just show you all the good, you know, the good stocks. Okay, sometimes I want to show you some other stocks that are not so good. Okay, but it's still within the AI universe. Okay, let's look at Capital DC REIT. Okay, So Kappa DC REIT. Let me see where's Kappa DC REIT. KEPPEL DC. Okay, Kappa DC REIT is here. So you just click on view. Okay, it takes some time to load the news. Okay, so you can see Kappa DC, right? All the news that's related to data center, that's related to Kappa DC will appear here. And they are taken from all the source here. Okay, so you can see, right? Actually way back in 15th of December, okay, there is already a news that they issue a letter of demand to the tenant in Guangdong data center. Okay, and they are demanding 43 million yuan, 48.3 million yuan for late payment, and of course, to top up their security deposit of 32.2 million yuan. Okay, so these are news that you can get from here. Okay, and you can see that a lot of data centers news are also appearing on this page. Let's take a look at the data center, the Kappa DC REIT's latest result. Okay, is here. Okay, so this was just announced last week or 2 weeks ago. Yeah, I think it's on a Friday. Yes. So you can see, right? You see, okay, at one glance, you will notice one very glaring thing. Okay, that is this property expenses. Okay, well, I mean, gross revenue drop, yes, they drop for the second half, right? 2H, right? They drop a bit only. MPI, they also drop a bit only. But the property expenses actually ballooned 85.6%. Okay, and this is where it hit Kappa DC REIT the most. Okay, so as you can see, right, the year-on-year decrease is mainly due to higher financial costs and loss of allowance for uncollected rental income from the Guangdong data center. That is the tenant default. Okay, so the whole result, you can see that actually they are not that bad except for this data center. Okay, as a result, right, distribution income, okay, dropped a massive 18.5% for the second H, and full year 9.3. Full year is not representative here because the tenant default happens in the second half of 2023. So I'll just focus here. So you can see that DI, the distributor income, actually dropped quite a fair bit. And DPU subsequently also dropped a lot, 16.1%. Okay, so you can see that Kappa DC is not doing very well. Okay, and let's look at it from a technical point of view. Okay, Kappa DC REIT. Okay, so as you can see, right, actually the chart is also very ugly. Okay, ever since this is the year from 2023. Okay, from 2023. Let's just look at 2023. 2023 to now, you can see that after hitting a peak here, right, they have been on a downward trend. Okay, and yes, during the November-December period, there was along with other REITs, right, there was an upsurge. Okay, until the default news came in. Okay, when the default news came in, do you see this very big red bar? Okay, so that was how big an impact is. And to make it worse, right, they actually accompanied by very high volume. Okay, which means that a lot of people are dumping. Okay, a lot of people are dumping, and it continued for next day. Okay, subsequently, yes, they actually rebound a bit. That's because of a drastic one. But when they hit the 50% mark, okay, they rebound by 50%, they keep dropping again. So you can see that they have been stuck at the downwards channel. Okay, and what make it worse is that they have already fell through the recent low. Okay, that was created somewhere around here. Okay, and they even go lower. Okay, so now we are looking at almost a 52-week low. Okay, almost a 52-week low. So if you pan out all the chart, it goes all the way to pre-COVID before we can see this level again. So this tell you how much Kappa DC REIT has dropped. Okay, in the short term, there is no sign of upturn at the moment. At this point in time, technically speaking, because all the indicators are down. There wasn't any indication that the price is going to go up. Okay, until personally, that's what I think. Until when there is a resolution to the tenant default, then we may perhaps see an upturn in capital DC rate. Okay, but before that happened, right? I would say capital DC rate doesn't look very good. Okay, but if they can solve the tenant default, capital DC rate, on the other hand, will be a very, very, very good proposition. Why? Because they are coming up from a very, very, very low base. Okay, so a lot of things it's not only about FA and TA. Okay, FA tell you how strong a person is. TA tell you what achievement they have made in the past. Okay, but news flow, news event is very important because they tell you what is going to happen or what might happen going forward. Okay, which is why just now I said in this share investor portal, right? News is one of my most used tab in the whole WebPro. Okay, followed by chart. Okay. Okay, I don't think I have enough time to talk about the other two counter. Okay, but if you all want to know, you can always PM me. Okay, and okay, so now I'm coming to almost the end already. Some key takeaway. So from a thematic approach, right? AI plus REIT equal data center REITs. Okay, so I mean, the increasing AI adoption, okay, that we have seen, okay, the potential of AI may very well benefit those stocks that is AI team, okay, in the AI universe. And with rates at a very high level now, okay, any rate cuts is going to bode well for REITs. Okay, it's going to provide optimism to REITs in general. Okay, so if you combine the potential of AI and the expectation of REITs benefiting from rate cut expectation, what you can potentially look at is actually data center. Okay, a potential sector to position yourself for the year 2024 and beyond. Okay, but having said that, right, as I just now have mentioned earlier, okay, some important thing that you have to take note is that stock market is never affected by one single event. Okay, there are a lot of other events that are still happening. Okay, like for example, the war in Middle East, the Gaza crisis. We have the Russia and Ukraine war still ongoing. Okay, we have the China economy tanking. Okay, so all this may affect the risk as well. Okay, affect the data center risk as well. So it's not like one size fits all kind of thing. Okay, and when there is a change in environment, okay, we have to be nimble and be ready to act. Okay. Okay, so I'm coming to the end of my webinar. Chinese New Year is just 3 days away. Here I hereby wish everyone a happy Chinese New Year. May the God of Wealth and the Angel of Health be with you in the Year of Dragon and beyond. Okay, and these are my contacts. Okay, as you all know, I'm a broker by trade. Okay, so if you think that I can value add to you in your investment journey, you may want to consider opening a POEM trading account with me. You can actually go to my profile page, tinyurl.com/ttp capital letter -DAN and click on open an account, and you click on stock and shares. Okay, and then you're not sure, you can always PM me. Okay, and I didn't roll it out here, but if you want, feel free to join my Telegram channel. Just go into Telegram, type Dan Daily Stocks. Okay, it's free of charge. I will post almost every day there unless I'm on leave. Okay, and with that, I've come to the end of my webinar. Back to you, Alvin.
Hey, thank you, Dan, for your very insightful and
I'm sorry that I overrun a bit.
hey, no worries.
Okay, I'm looking at this Q&A. Okay, maybe well, there are quite a few questions. Let me just can I just take from top to bottom? I see that they are paying themselves manager and sponsor high return at the expense of unit holders. Okay, for this question, right, I'm not too sure which REITs you are referring to. Okay, So I can't really comment here unless I know which REITs you are referring to. Okay. Then for the second one, dividend are there, but price drop wipe out any return on investment. Okay, for this one, right? This is a very good question. As I mentioned just now, right? If you still remember my analogy of buying REITs and buying property. Okay, so if you are property investors, right? When you buy a property, it doesn't mean that once you buy the property price will go up. Okay, it will come down, you go up, you come down, you go up. Okay, when you come down, you just collect the rental, okay, and wait for the opportunity to come up. Okay, it's the same as REITs. Of course, when I say REITs, I'm saying in a very general sense, and I think I did mention earlier that we should be looking at established REIT. Okay, REIT with a strong sponsor, REITs with a healthy gearing, REITs with strong fundamentals. Okay, I mean, I can just list a few lah, like CapitaLand Integrated Commercial Trust. I think it's one of the most diversified REITs around. It's very big. Okay, of course, Ascendant REITs is also one of them. Okay, MIT Mapletree Industrial Trust, although the price has not really reflected it, I think it's a very good REIT. Not just because they are in data center, but because they are backed by Mapletree, which is the market link, and they have been paying quarterly. Okay, so the price, although they have been there, right, we have been receiving quarter dividend, and the dividend is as much as 5%. So when you say dividend are there, but price drop without any return on investment, it depends on your investment horizon. Okay, if you are looking at REITs, usually I will assume that you are on a recurring income portfolio. Okay, so let me give you some context. So as a broker, right, when my client asks me what to buy, I will always ask, what is your objective? Okay, what is the portfolio you are going to embark on? Okay, if you are active traders, then REITs may not be the one that you should be looking at. Okay, you should be looking at counters like maybe some of the supplier to chip makers. Okay, like Franken, UMS. Okay, these are very good mid-cap stocks, and the capital appreciation, the volatility is there. Okay, for REITs, it's actually more for recurring income, more for stability. Yes, the price will drop. Okay, but as I mentioned before COVID, right? You will never see REITs dropping like that. Okay, it's only after COVID, post-COVID, where you see REITs behave like that because of first the pandemic, second the rate hike cycle. But now we are already so-called past them already lah. Okay, so now looking forward to at least, I would say, the next 1 to 2 years. Okay, it's unlikely to see another rate hike cycle unless something happen. Okay, so that is the direction that I'm looking at. Okay, what is your view of Singtel data center with NVIDIA? Okay, that is a very good question. Actually, today, because my topic is on R&R, rates and risks in the AI world. So actually, beside REITs, right, there are also other stocks that are involved in the data center. Okay, and Singtel is one of them. Okay, and personally, I think Singtel is very, very good in terms of from a thematic approach. Okay, first of all, they are now at a low base. Okay, if you notice, their recent low is about 231 or 232. Okay, now they are trading at 23 something or 24. I can't remember. Okay, so number one is from a low base. Number two, they give out dividend twice a year. Number three, okay, they have a very strong fundamental. And number four, which is a catalyst, that is the data center collaboration with NVIDIA. And remember, just now I showed one of the news article that Jensen Huang, okay, NVIDIA CEO, is looking to build a large supercomputer here. Okay, so if you add, of course lah, I cannot predict, I can only project. Okay, so if you add these two bits together, right? Okay, Singtel is actually a very potential partner to NVIDIA if NVIDIA really come to Singapore to build a supercomputer. Okay. Okay, this question by Andrew. Why Singapore compared to other country? I'm not too sure whether you are referring to stocks or referring to just REITs. Okay, if you are referring to REITs, right, or data center REITs, right, I would say that I use Singapore because number one, obviously we are in Singapore. Okay, I assume that a lot of us are Singaporean or Singapore residents. Okay, so there's no forex risk. Okay, there's no forex mitigation. Okay, number two is that as far as I know, right, Singapore, the REITs presence in Singapore, we are the biggest in Asia ex Japan. Okay, that's number two lah. But I have to verify on that. Okay, but that's what I remember about a year ago when I read some articles. Okay, so in terms of this, right, I would think that if you are looking at data center REITs or even REITs in nature, Singapore may be a place to consider. Okay, if you look at all our regional bounds, whether it's Hong Kong, China, or even Korea, okay, or even India, okay, the only up and coming one, as I can see, is actually the Indian market. But unfortunately, I myself is not very familiar with Indian market. But from what I read, right, China, Hong Kong is not doing well. Korea is, is somewhere there. Okay, India is quite promising, but I don't have a lot of access there. Okay. Okay. Then okay. DG Core REITs just announced private placement. Is this bad for unit holder? Okay. Whenever there is a private placement, one thing will surely happen. Okay, that is a large base. Okay. However, considering that they are using these funds okay, to fund the Japan acquisition, okay, I would like to think that, this private placement, the impact is not that big. Of course, now it's hot. Tomorrow, maybe you see they come down a bit. Okay, but over time, right, I would like to think that this private placement is actually good for Digicorp. Okay, because they are already, they have already get rid of that tendon bankruptcy issue. That one is a very big issue. Okay, but they managed to solve it somehow. Okay, Capital DC REIT is still inside, so Capital DC REIT is not even solving the problem yet. Okay, so you can imagine how big a potential is if KDCR, which is Capital DC REIT, is able to solve the problem. Okay, but DG Core has already done that. Okay, so going forward, I'm quite favorable about DG Core US REIT. The only thing that you may want to concern yourself is that two things. Number one is in US dollar. Okay, so you have to be mindful of the forex. Number two, they are quite a small REIT. Okay, so even if they sold off 2 data center in Silicon Valley, they buy some in Japan, okay, their total property under management could be maybe 11 or 12, okay, which is not very big, I would say. Okay, so they are one of the smaller REIT. Okay, so the potential is there, but you need to be very mindful about the news flow. Okay, of course, the WebPro, you may use the WebPro to scan for some of the news that's going to come out on a day-to-day basis. Okay. Already have Boyum account, can still use service without opening an account? Most likely yes. If your account is not with a house dealer, okay, we can actually do a transfer of TR. Okay, maybe you want to PM me. Okay, then we can take it from there. Okay. What are the ways to play for weekly gains? Okay, this one is a bit difficult to answer. It really depends on if you are looking at short term, right? I would say that two things. Okay, fundamental have to take a back seat for sure. Okay, these two, one is technical. Okay, the other is news flow. Okay, if you already have a very good technical setup, what you need is a news flow. Because technical setup only tell you what happened before. Okay, you need a news flow to confirm that action. Okay. Is it actually a good time to buy Capital DC REIT as normally this REIT price is very expensive? It's not for this issue. Okay, I think I explained the webinar. No, no. As long as they have not solved the tender issue, okay, if you buy now, you have to buy with, I would say idle funds that you don't need. But I can tell you in the near term, there won't be much of a upside unless they can solve the tender issue. Okay, because that is a very big issue to them already. Yeah, REIT ETF, that is good. But REIT ETF, because today we are talking about thematic, you see, so it's very niche. Okay, so we are talking about AI related REIT. Okay, so REIT ETF, I haven't really gone through all the REITs ETF, but if you can find one that's data center theme, then perhaps that could be an option. A few words on Capital Land India Trust. Okay, this one I can only answer based on what I know now. Okay, number one, India is up and coming. Okay, number two, Capital Land India Trust has been acquiring quite a few property in India, and some of them are data centers. Okay, if I understand correctly, right, if these two are what is actually happening, Capital Land India Trust is potentially a very good REITs that you can consider. Okay, but as I mentioned earlier, I'm not very familiar with the India scene, which is why I never include in this webinar also lah. Okay. Okay, I don't think I'm sorry, Alvin, do we still have time to go through some of the other questions?
Yeah, we still have time.
I still have time,
Yeah, we can just go through all the remaining questions.
Okay, good. Okay, is cloud storage a risk to data center? Okay, I would like to think that the risk is not that big, okay, because ultimately data center can store a lot of information. Okay, even your cloud storage, sometimes you still need data center to store it, to store the data lah. For this, maybe I have to consult an industrial insider also because I'm not IT trained. But as far as I know, even for cloud storage, right, the cloud storage, they also have to have a data center. Okay, if that answer your question, okay. Trust versus REIT, a few words. Okay, very good question. So the main difference between trust and REITs is that REITs, as we all know, they are adhere to the regulation of paying out 90% of the net profit and having a gearing of 50%. Okay, the main difference between a trust and a REIT is the identity of the trustee and the manager. Okay, for REITs, there have to be two different entity. Okay, the trustee is the trustee, the manager is the manager. They have to be separated. For trust, they are the same person. Okay, and they are governed by different rules. Okay, different regulation. In fact, I can recommend you a website to go and take a look. They give you a very comprehensive between the difference between trust and REITs. Okay, you just go to www.reitas, REITAS.org. Okay, so it's actually REITs Association of Singapore. Okay, so there's a page on the difference between a trust and the REITs. Okay, is it advisable for me to sell Keppel D series and do Singtel? Wow, this one is this one is a bit difficult to so-called comment if I don't know the context. First of all, it depends on what price you buy the Keppel D series. Okay, if you are buying near the recent price, like maybe 180, 190, $2. Okay, yes, I would say maybe you want to consider selling the Keppel D series to buy the Singtel. But do note that Singtel is a very slow moving counter, but they are more stable. Okay, but if your Keppel D series is buy at above $2, let's say, 220, 230, then I would say that maybe it's not so advisable because we don't know how the tenant default will transpire. Let's say, for example, if you sell today, tomorrow they say, oh, okay, they have settled with the Blue Sea development, which is the tenant. Then Keppel D series will just jump up. Okay, then you will be making a loss already. Okay, so it really depends on the context, what price you have bought. Okay, your risk and reward, your opportunity cost. Okay, can you give your experience of using IV of share investor? IV, sorry, I'm not too sure what IV is. I mean, do you know what IV is?
Sorry, can you clarify? I'm not too sure. So, yeah,
I'm
could you
sorry,
clarify which
I'm
part is
not too
IV?
sure.
Yeah.
Not too sure what IV is. Yeah, I think that's all the question we have here. I'm so sorry. Maybe you can PM me, then maybe I can explain to you in more details for this anonymous attendee. Sorry about that.
Okay.
Yep.
If you
So
have any other If you have any other inquiries, you can also drop us an email at admin@shareinvestor.com. Yeah. So Dan, thank you so much for the insightful sharing. It's been a great session with you. Hopefully more to come. Yeah, because we do have some potential topics that you mentioned just now. We can discuss more further down the road.
Sure, I'll be glad to be back.
Yeah, it's been
Mm.
great having you. For
Thanks for
everyone
inviting
else,
me.
yeah, it's great. So for everyone else, I don't want to take too much of your time. Um, for for Share Investor, we have a CNY promo now until 29 February. It's 15% off, so you guys can consider subscribing to us. Yeah, there's also a 9 days trial for WebPro if you're not too sure whether you want to subscribe. Yeah. So
Okay, thank you everyone.
yeah.
I'm sorry that I overrun quite a fair bit. I might have eaten up your dinner time. Okay, please go and have your dinner now. Okay, with that, I think that's it for me. Thank
Yeah.
you.
No worries. The Q&A has been very insightful too. Yeah, so everyone, if you don't want to take too much of time, thank you for joining us on this webinar, and hopefully we can see you again. Yeah, bye-bye. Happy New Year.